Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, August 25th at the market's close. My gosh, where did the summer go? The U.S. Federal Reserve may need to raise interest rates further to ensure inflation is contained. U.S. Federal Reserve Chair Jerome Powell said this morning in remarks that balanced declines in the pace of price increases over the past year with the surprising overperformance of the U.S. economy. He summed up his comments by saying, "It is the Fed's job to bring inflation down to our 2% goal, and we will do so." And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, we're going to look, as we always do, at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the ETF that closely follows our benchmark S&P 500 index. And for me, anyway, the S&P index and the SPDR are kind of my crystal ball for me to judge where I think the market might go next. And anyway, it certainly gives us the mood and manner of the market. Now, today when I captured this chart, the SPY was trading at $439.97, about $43.99 on the S&P 500 itself. It is now trading at 8% below its all-time highs at $479.98 in January of 2022, so just 8% below those highs. Now, we know that after the breakout, you can see here on the chart, look left with me, after the breakout in May and then June, the SPY walked up the 20-day moving average up here to a June high, right here, to a June high at $443.90. Back down to the 20-day moving average, then back up and almost retested that high again at June 30th at $444. Then came back down and continued to use the 20-day moving average as support and as a trend line. So look at the really nice trend line here that the red line, the 20-day moving average drew for the SPY, and you can't ask for much more than that. It eventually climbed open to gap up on July 27th and rose to an intraday high right here of $459.44. Then the next 3 days it kind of teetered like, oh my gosh, can we do this? Also, it was overbought in this area on the 14-day RSI. So it's overbought. It's kind of teetering here. What are we going to do? Then it said, all right, I can't do this any longer. And it fell down below the 20-day moving average, then down below the green line, the 50-day moving average, excuse me, and finally on August 18th, which was a week ago, it gapped down to open at $433.37. Now, in this past week, it's rallied back up again, and it hit its head on the, look how the 20-day is coming over to cross down over the 50-day moving average. That's a slightly negative signal, but nothing to really, but yeah, it's slightly negative. So it gapped up. Actually, it was yesterday or a week ago, Thursday's open. It gapped up from the day before, hit its head on the 20-day and the 50-day moving average, both of them coming in at 444 and change. So let's call it 444, 445. Hit its head on that and could not climb over it. So then it fell down, and again, we're at today's price at today's close at $439.97. We can say, okay, so where is price support? We have it down here at today's low at about 435. If we look left on the chart, we can look over to the potential price support down here from June at 431, if I could draw a straight line. And again, the low we had the other day at 433 right here. So 433, 431, that's potential support should it break today's low next week. We do have resistance, as we know, it's potential, but right here at the 20 and 50-day moving averages, we'll call it 445 to make it easy. So we do have a support again from last week's low at 433, as I just said, and 431. What are we looking at here? In the last week or so, we can say the market is basically flat. It hasn't really gone anywhere. So after the market makes up its mind, and I really prefer trading when the SPY is over the 50-day, at least that's what I prefer. It's not what always happens. But after the market makes up its mind where it's going to go next, I think we're going to find some really good opportunities. Next, let's look at a daily chart of the Invesco QQQ, symbol QQQ. The Qs represents the top 100 non-financial companies by market capitalization in the NASDAQ 100, including companies like Alphabet, Amazon, Nvidia, Microsoft, AMD, Tesla, that whole group. Now, when I captured this chart today, the QQQ was trading at, or closed today at $364.02. It is now about 11% below its all-time highs in November 2021 at 408.71. Now, we know that like the SPY, the Qs broke out in its April and May. It consolidated back March, April, May. Then we do know that it broke out into a very enthusiastic rally. Walked up the 20-day and even traded at a premium. Its uptrend went into a premium above, or a space above, the 20-day moving average. And that run-up lasted until the June 16th high right here when it gapped open at $372.85. Then it finally gasped for air, came back down to the 20-day moving average, and then rallied up to the July 19th high up here at $387.98. And you may remember when I told you last week that moving averages can be like a staircase, especially the 20-day, which is a fairly short-term moving average. And if you figure price as your legs going up a staircase, you might skip a couple of steps and then skip a couple of steps and go up higher with lots of energy. But at some point, your legs get tired and you've got to come back down and start taking one step at a time again. And of course, at some point, you've got to quit climbing the stairs. You're going to get too tired. And that's what price does with a moving average like the 20-day. When it goes up, it gets tired and finally has to sit down, at least for a period of time. So again, we had the July 19th high at $387.98, dipped back down to the 20-day, then said, gosh, I'm tired. My legs are too tired to keep going. And then came all the way down. It went back, fell down through the 20-day, through the staircase, then fell down through the 50-day, really tired, and down right here to August 18th, it opened, and that was a week ago. It opened on August 18th at $355.26. Now, like the SPY, only with a little more enthusiasm, it did rally this week. And actually, Thursday, it gapped open at $372.64 above the 50-day and above the 20-day. But it could not stay there. The shorts came in, some selling came in, and it fell back down to close, back down below the 50-day and at 371, and the 20-day moving average at about, we're rounding it out to 369. So now the Qs are down here, as I said, at 364. It has resistance at 369 right here and 371 potential resistance where these two moving averages are. We have support here at 354, and if I can draw a straight line, we'll see that it is also potential support from 363, 364 back in May, back in this consolidation here. So that could be of some help if it does go lower. But like the SPY now, it's essentially treading is what I meant to say. It's essentially treading water, deciding which way to go. So please trade carefully and please keep your stops in. Our final chart for the day is a daily chart of the Utilities Select Sector Spider Fund, the XLU. It has 30 holdings. Top holdings include NextEra Energy, Southern Company, Duke Energy, Sempra, American Electric Power. Now, when I captured this chart today and at the close, the XLU was trading at $63.63. And if you look left with me, look back here on this chart, back to January of this year. Look left all the way almost to the hard left edge here of the chart. If you look with me there, the XLU made a high in January at $72.27. From then, it's had quite a time. It fell from those January highs all the way down to the March low here at $63.62. Then it rallied from there up, back down, took another breath, and then got up to the 50-day moving average at 68, then came back down and retested the lows at 63, then rallied real hard here and got up to the April high here, just over, went up through the 20-day, up through the 50-day, actually got up through the 200-day, and all these moving averages, of course, are kind of in reverse order here because it came down pretty low. So it got itself up over the 200-day to a high of $70.28, then started slipping again, couldn't get above the 200-day moving average, fell below the 20-day, fell below the 50-day. And down here in May, returned to $63.93. Then that move popped up to form this hammer formation. You see this in mid-June at $67.84, then back down to 84 at the end of June, back up to 69 in July. And I drew a trend line here, so it that's what this straight line you see is, back up above the 20-day, the 50-day, up above the 200-day in mid-June, and then back up to 69 here in July, I should have said. Then down in the past 2 weeks, back down to its lows here at the 63 level. And you say, well, this is great, Toni. What is all this telling us? It tells you first that what we know here is there is definitely support here at the levels of 63 and 64. There is definitely pretty long-term support here, 63 and 64. So I'm taking that into consideration. A long-term support that holds is always a good thing to see. Second, we do know that utilities stocks are influenced by bond prices. And so the simple explanation is that if interest rates do start lower, like the 10-year bond, the rates on that, if they do start lower in the next week or two, utility stocks may start higher, okay? And if the market keeps treading water, another benefit of the XLU is that this is a defensive play. You know what defensive play is? They're always utilities and healthcare are two defensive plays. And of course, this is utilities. So I'm going to make this simple and I'm going to make it no nonsense. If you want to be in the market, you want to look at the XLU in the coming week. If it can stay above $63, all right? If it can stay above, and let's say close above, because that's very important. If it can stay above and close above $63, I may add a small position of the XLU to my trading portfolio with a stop at $62. If and when the XLU closes and rises above and closes above the 50-day moving average, which is now coming in at $65.52. At that time, I will add to my position, and of course, my stop by then will be a trailing stop. So you may want to keep an eye in the XLU in the coming week. Finally, if you'd like to become a more successful trader, this is a great time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. If you'd like to learn how to swing trade, we have How to Swing Trade Successfully. We have How to Trade the Trend to Profits, one of my favorites. How to Read Charts is great for novices. 3 Winning Setups, great for short-term traders. And another one of my favorites that we're probably looking at right now with the XLU, How to Bottom Fish Like a Pro. Go ahead and check out these timeless programs. They will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my online training courses by going to the link on this screen right here or simply clicking on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.